everybody. It is time for this week's Mortgage Minute with our beloved Tatiana Ivleva-Lopez with Prosperity Home Mortgage. Hello.
We're back.
Hello. You're back. Yay.
Yeah,
Yay.
I know. It's been so long. All right, so it has been, gosh, almost a month now. So you probably got
Yes.
some pretty significant difference because I know a lot of times it changes just a little bit each week, but now I bet you've got a good hat on, a nice hat.
Good, happy, nice hat.
Yes.
For the last week, yes. Today, the day I'm gonna take it off for today, but we're not talking about today, right? We're talking about the whole week. So let's see what was going on here.
Okay.
So the interest rates declined last week for their lowest level of 2025. So they've been pretty much going down little by little in the past few weeks. And we have 6.83 for average conforming rates. Jumbos are a little bit better, actually, 6.68, and FHA 6.49. Sometimes depending on credit score, I quote a little bit better rate on FHA, 6.25 or so. So, it's an average rate right here, right? It all depends on what the credit score is. And here it shows 780 credit score, more than 40% down payment. So that's why it's average. Sometimes it's more, sometimes it's less. But Freddie Mac reports from Realtor.com, senior economist Joel Berners read in a statement that here's what he's saying: we do not anticipate significant relief from high mortgage rates in the near future because of inflation remaining high, which will not be helped by the tariffs that Trump administration appear committed to rolling out. So we know that he came up with tariffs. Now he paused them. And, the market actually today is not doing too good for interest rates. So we'll see. It's a roller coaster. It's going up and down. But the trajectory right now, the rates are improving a little bit. Again, with tariffs, possible tariffs and inflation, I wouldn't bet on low rates. And if someone is purchasing right now and they're settling within next 30 days, 45 days, I would just lock it in. As we say, better is enemy of good, right? So I wouldn't I wouldn't play with the market right now. It's very unstable. Yep.
Okay.
Did you see? I'd heard on the radio or somewhere that somebody reported a 20% increase in mortgage applications this last week with that little dip in the rates. Did you see any of that, or do you feel like that's accurate?
Yeah, I do. I did. I feel it. Yes, the loan applications are up. People are applying, looking. And what do you see on the market, like property wise? Do you see more listings?
Yeah, we actually got a nice influx of listings this past week, and buyer activity has kind of flattened a little bit the last 3 weeks. I guess with everybody's or not everybody, some buyers are a little bit like cautious with figuring out what's going to happen with the layoffs and everything. It's still an upward trend, pretty significant. It's just kind of flattened over the last 3 weeks, and then inventory is finally starting to pick up. So it's actually a little bit of a window for buyers where, there are a lot of properties getting multiple offers, but there are some that are making it through the first weekend where a buyer might actually be able to get it at asking price. So it's a good time for buyers to kind of get out there and dive into it.
Especially the ones that are not staged very well, where those are the ones that they can actually kind of get a little bit of headway in, not like lower than asking price, but
get some contingencies and not bid against 50 people. And,
Right. But remember, what was it? Yesterday, I texted you asking if certain buyers and your borrowers that we share, if they were government employees. I was asking because I wondered about overlays with your company about verifying employment, the timing. Like, are you guys having to do that again the day before settlement?
Oh, we always do that, not the day before settlement, but within 10 days of settlement. We do 2 verifications in the very beginning, and then at the end, 10 days before settlement, we always re-verify that it's nothing new to it. But
Okay.
yeah, I know that some people paused, and I was surprised to see that applications are up. However, I don't know if there's really a data, now I'm thinking about it, is there is data how the increase in applications correlates with actually people writing offers? Because, you can apply and sit on it, right? And I have clients like that did the application and then they said, we're gonna pause because of this uncertainty. We don't know what's going to happen with our jobs or in general.
Yeah.
So yeah, people apply, but not necessarily writing offers.
Yeah.
Okay.
I think that what we're going to probably end up seeing is here in the next couple of weeks, these people that are kind of holding back are going to start realizing, okay, for the ones it's okay for, they're going to get comfortable and go into the market. So we're going to see a surge, especially if the rates kind of stay in the 6s. We'll see a surge of activity with buyers here in the next few weeks.
Absolutely.
Yeah, I think so.
I think so.
Yeah.
Plus, we're getting
Well, we
in
were
that spring
mastermind.
market. I'm sorry.
Yeah.
Yeah. Yeah.
Yeah, that's gonna be
Yeah. It's
starting.
It's starting, and it's almost like it's starting, but it's hitting a little bit of a pause for a second. Not a drop, but a pause. Like we're getting ready to go, and we're about to really dive into it. So
yeah.
But what you were saying about the mastermind?
Yeah, so we were in a mastermind yesterday, and some agents in there said they were working with, they had some deals under contract, and some lenders have put in that new requirement to check employment the day before because of the layoffs. And it actually, there was an anecdotal story. There was an agent where her buyers were supposed to settle on Monday, and they got laid off the Thursday before that. And so then the lender did that final check, and it kind of went up in smoke at that point. They're still working it out, I think.
Yeah, I think they were able to, was it the same one that was able to kind of find a workaround with like a letter of intent?
I think that there was some conversation about that, but I don't think it was that one.
Okay.
Yeah. So that's why I asked you.
Yeah. Well, no, it's 10 days. I'm surprised to hear that one day before, because that could be nerve-wracking. Not all HRs respond in timely manner. So what are you gonna do if you check in a day before and nobody's responding to you?
Yeah.
Right.
Yeah, absolutely. Yeah.
I don't know that particular situation, but maybe it just happened that they heard back only on Thursday, or Friday, the day before,
that's
because
true.
HR was slow. Yes.
That's true.
I
They
don't
could have
know.
done the 10-day check and it came in.
Well, but they were saying that lenders had a new requirement to check one day before. And they, maybe it was only for if they were government or federal. I don't know what it was, but and that's just the word on the street. That's not anything I know for sure.
Yeah.
Well, and every lender has their little, overlays and requirements to cover their bases and make sure that the loan is going to be sellable at the end. Definitely. Yeah.
Maybe it was VA.
It could be. Well, so that's another good question that came about the VA. We need to ask that another day.
Yeah.
Okay, so I hear you got an exciting product.
Oh,
like we are so really wanting. We've got some buyers that this is going to be a great thing for. So tell us about this new loan program that you have.
Yes.
Yeah. Well, so what happens if you have a house that you want to sell, and there's a new house on the market, house of your dreams that you wanted to buy, but maybe you don't have time to sell your current house, or maybe you don't want to be contingent on the sale of your home. When you write an offer, and you tell the seller, I want to buy your house, but I need to sell mine first. And there's a competition, the chances are they're gonna pick someone else are pretty high, right? So
right.
why would someone need to be contingent on a sale of a home? There are two reasons. Either you need to have cash, get the equity out, and so you can put it into the new house. Or maybe you do have cash, you're not really relying on the cash, and you're okay buying it and then selling even a few days later or a month later and just replenish your assets, but you don't have enough income to qualify, right? And then that's when it becomes really a pure contingency that lender would say you have to sell in order to buy because you don't have enough income to qualify for the current home mortgage plus the future mortgage and whatever else you have in between there, right? So that's what I want to talk about. A little prelude to my buy before sell program that we rolled out. What does it? Yeah, ta-da! So what does it do? It emits the departing residence principal interest, taxes and insurance from the calculation of debt to income ratio. There's no need to get the bridge loan. And so here's how it works. Here's the requirements. For us to exclude that payment from calculation of debt to income ratio, you have to have 30% equity in the property. And the way we determine that, it's a market analysis that are done. Also, we need to have the listing agreement in place, and not necessarily house needs to be already listed on the market, but they need to have a listing agreement with the listing agent. And that listing agreement would have to show that they're going to list the property for more or equal to whatever the evaluation market value we would come up with. Also, we would need to see that buyers have some extra reserves in their account. What are the reserves? So let's say when you buy the new house, you need to come up with 100,000, right? And you show that you have 100,000, but we also need to see that you have additional money, and they don't have to be in liquid assets. They could be even in 401k accounts, and you don't have to liquidate them. Or maybe they're in stocks that you also don't want to sell. We would take those as additional reserves, 12 months of worth of mortgage payment on property that you are departing from, your current home, plus 6 months of mortgage payment for the new property that you're buying. So as long as there are enough of reserves, that will take that. What if your current home is already under contract and it's non-contingent contract, meaning there's no contingencies left, right? The buyer of your house, they cleared all the contingencies, financing, home inspection, appraisal, you name it. So we could actually use 50% equity of your property as reserves if you don't have enough reserves elsewhere.
That's good.
That's awesome.
Yeah, so those are the highlights of the program. Will it fit everyone? Probably not, but it's something that additional something to look into, and maybe some clients will qualify for it. I have some people that qualify for it and actively looking right now.
I think that last point, if your current house is already under contract pending with no contingencies left on it, I think that will get a lot more people in the game with being able to get that to have that count as reserves. I think that's really good.
So I have two questions. First question is the loan recastable? And then the second question is on those reserves, let's say you have your 12 months and your 6 months. After settlement, is there an agreement for how long you're going to keep those reserves in a given
Oh,
set
nobody
account?
cares. Nobody cares about that. Yeah,
Okay,
we
you
don't.
just have to show that you have that liquidity.
Exactly. We
Yeah.
just have to show that there are money and they're actually liquidable, right? So you can take the money out because, you know, you might have 401k, but it's not vested, or maybe
Yeah.
it's 401b for teachers, and you can tap to it only if you quit or if you're in retirement age. But so we would look at things like that. So it has to be approvable assets, but we could use that. And yes, the loan is recastable.
Okay, awesome.
Good.
Okay, I like it.
Yeah.
We have to keep that in mind because that's something a lot of people are coming up to.
Yeah.
Yeah, we finally are seeing people that are wanting to sell their house. I guess that maybe they're either getting, it's not fulfilling their needs enough that they're actually willing to put it on the market, but they do need that money to go buy the next house. So it's kind of that, you know, navigating that. Yeah. In fact, we're looking at one of our clients, we're looking at the potential of find a home to buy contingency. It's like home buy contingency because they're willing to sell it, but they got kids and they don't want to be homeless if they can't find a home to buy.
Right. Yeah.
So that's one of the considerations we're doing.
Open-ended PSA.
So if they actually need funds, right? They need money, and maybe they have plenty of income to. This is not a problem for them. The bridge loan is one of the options, and I believe we spoke about bridge loans before. But if somebody has questions, I can answer. Of this, you know, give me a call and I'll explain. Or, you know, and sometimes we're looking at maybe options of someone taking a gift or take money from 401k, even if they put minimal down payment, just like you're saying, they can recast later. So they put minimal amount down, and once they sell the house, they will, you know, replenish that 401k. They put money back into 401k plus throw it into principal. And recasting means that you tell the lender to recalculate your monthly payment based on your new balance. Instead of shortening your term, they just recalculate the payment. It costs a couple of $100 to do. It is a very good option. And that's what I also offer to my clients.
Yeah.
Okay.
Very good. All right. So what's that number for them to call you?
They can call me at 571-245-3000. And we have a lot of new programs outside the box out. So we'll be talking about them next time. So stay tuned.
Awesome.
I know.
I love creative.
I do too.
All right. Okay. Well, have a good week, and we will see you next week.
Bye, Tatiana.
See you soon. Bye.